So I guess the question is more so, why did you start trading? What is it about the stock market that fascinates you, and what are you looking to get from it? I think people really boil it down too simply, and for me, it's a matter of managing risk more than anything else. I think that's tantamount to any other concept in trading. Technical analysis, fundamental analysis. None of that matters if you don't know how to manage risk appropriately. And so what I'm going to be doing over the next couple of videos is going through different types of trades based on the kind of risk you'd be willing to take as an individual. Now, me personally, with one of my accounts, I take a lot more risk. It's a lot smaller account, a lot less on the line. Another account, my larger account, is long-term. It's safer. I want dividend payers. I want consistency. I want strong cash flow businesses. I want stuff that is going to sustain market pressures as they are, because inflation is beating the living shit out of everyone in the market right here, right now, and it's going to continue. JP Morgan just published information saying that there's going to be a recession in 2023. So the real question is not whether or not it's smart to invest. You know it is, because you have to beat that inflation, which is ever rising. The question more so is, what is the right investment for me, and how do I make this make sense for me as an individual? Maybe you're a single 23-year-old, just got out of college, and you have a lot of cash available, ready to go because you got a great job and your expenses are minimal. Or maybe you're a parent and you're looking to just invest $100 a week to try and build a nest egg so that you can retire before you're 85 years old and actually enjoy your kids' lives. Those are two totally different risk profiles, and those are two totally different types of investors / traders. So keeping that in mind, the first one we're going to look at is for that 23-year-old bastard, handsome bastard that has all this money to spend, and doesn't really matter if they're going to take some risk. What matters is that they're going to see a significant return on capital. This first one is OTLK. That's Outlook Therapeutics. This one is a very strong buy by a number of analysts. We're going to go right to that. Price target's going from $12, $9, and $10. So I would call that median price target of about $11. By notable firms such as Oppenheimer. I think this one is really poised and set up quite well here for a move over the next quarter. And one thing to consider in taking this as a trade that I personally will be taking, I want to add this as a position trade, meaning it's all in one way or another. Not all in as in my portfolio, but all in a sense that I buy the whole position at once. I don't cost average, and I set a firm stop and a firm take profit, and I just let it ride. This is a set it and forget it trade where you put in your entry, you get your order filled, and then you set your target and your stop loss as a bracket order, and then you just let it ride and see what happens. Because in truth, I think if this thing can't hold above 114 or so, I don't think it's going to come up anytime soon. Small caps are getting beaten to death. If we take a look here at the small cap index provided by the iShares Russell 2000 ETF, I think that we are seeing what could be the formation of a double bottom here. It's again, Finviz is pulling that. I don't necessarily trust these algo scanners. I want to do it myself. But from a candlestick perspective, it does look like we're seeing a little bit of minor bullish engulfing here, but these moving averages still look abysmal. At the end of the day, all of that doesn't matter. It's what is the market sentiment and what do we think is going to happen? I think if the S&P is continually red, this is going to stay neutral or bearish. And I think if the S&P really rips, we could see small caps make a comeback. And I really want to keep a close eye on these indexes, the small cap tracking indexes, because they will give us a forward-looking indication of whether or not a lot of these small cap biotechs are going to move. So in going back to our trade on ticker OTLK, I think that we can see a sustainable support here off these moving averages, about $1.20. I don't mind that as entry as long as it's above $1.20. I don't want to see anything below. If we do, I think I'm going to set my stop 114, as I said earlier, and that'll be the end of the trade for me. It either makes or breaks. I haven't added my position yet. I'm going to wait and watch this evolve over the next couple of days just to make sure that we're taking this trade appropriately. And now we're going to flip to the chart here. $1.20, 23% fib retracement. I think that we consider that quite stable. We don't want to see too much price discovery below this, because then we're just going to keep going down, and then you're looking more at like sub $1, which fuck that. I don't want anything to do with that. So above $1.20, I think we're going to retest this area right around here, about $1.40, $1.45. I think that's realistic. And if we do see a big push, we fill this gap, and then we keep going, and we'll probably test to the middle of this range, $1.83. I think long-term, $2 is not insane. I think that we can realistically see a push up if small caps come back, because this is a very quality company as far as their pipeline and just outlook going forward. They also just published a very interesting fact that one of the managing directors just increased their position substantially. So large scale insider buying, which is always a strong performance indicator as far as a future for a company, because we want to see insiders buying, showing that they have all the information that we don't have, and they're saying, I want to buy this. They're saying that this is going to appreciate in most cases. So I think this one is going to be a great buy for a trader that can take a little bit of risk, that is willing to take a set it and forget it trade that doesn't necessarily require management, but does require daily maintenance in the sense that you want to keep a close eye on that small cap index, because if that just sinks, then this is either already going down or it's going to follow. That's why we set that stop. So it doesn't matter. If you want to just set this and forget it and not deal with it, feel free, because you're going to have your stop and your take profit in place. And that way you can really manage all risk on this trade. It's a defined risk trade. You should know that before every trade you go into, you should have an exact idea of this is how much risk I'm going to take for this amount of reward. My ratio personally is 1 to 2.5. I will risk $1 as long as I'm making $2.50. That's the risk reward I'm looking for. So for example, I will essentially take a stop out at 5% as long as I'm going to make at least 12% on the trade. Does that make sense? Net differential of 7% on that trade specifically. So keep a close eye. I'm going to be posting some long-term safer plays here. We're going to be putting together some long-term trades for the dividend style investor that wants a set it and forget it multi-year type of play. I have some great hidden growth trades I've been working on all summer, just watching, analyzing, making sure that the data readout is coming out in our favor so that it is a strong, conservative, and intelligent buy that still has a significant growth potential. We started talking about Overstock.com back when it was trading about $15. This is right before COVID. We knew that they were positioning their business for online scalability. We knew that they were venturing into the crypto space and getting involved with some key players that really understood the digital space. We talked about this company. It was about $15. It traded all the way up to $120 plus. That was a 900% ROI over the next couple months following the alert. That was a great play. We've got Cassava Sciences. We called that one at about $2.50. Fantastic Alzheimer's play that just made absolute sense. Multi-billion dollar market. Nobody is taking that market share, and they were one of the furthest advanced as far as Alzheimer's treatment. We knew that no matter what, we'd get a run even on speculation and hype. It ran from $2 all the way to $130 plus. We saw a ridiculous 10,000% return on that one. Absolutely outstanding results. These are hidden growth trades that we find where no one else in the market is looking. You have to be smart and inventive to trade in these markets because it is such a crowded space. And most of these trades that you see are being executed on the daily are executed by high frequency trading bots. It's all algo and computerized trading. I mean, it's bullshit. It is what it is. But we're not positioned to do well unless we are willing to be creative and inventive. And that is the one advantage we have over the machines. So, long story short, I love y'all. Stay blessed. I hope you found this trade interesting. Again, follow the channel. We're going to be posting some longer term plays for the longer term investor. We're going to be finding some hidden growth opportunities that can yield you a substantial return over the next couple of years. And make sure you follow for all your trading education, trading needs. Love y'all. Stay blessed. Bye.